to me, the worst was the financial crisis. And that was my first real learning experience.
The S&P went down to, I think, 666. Then, we're at 5,000 today.
He goes, 300 stocks will go to $1, multiple of them.
This one does have the potential to get.
Hey, what's up, everyone? Welcome back to another episode of Trading Takes, presented to you by Investors Underground, the show where we chat everything trading. I'm your host, Sam, and tonight I'm joined by two seasoned veterans. They've seen just about everything the market can throw at you. Decades of experience. These guys have navigated massive runs, brutal drawdowns, and every kind of shift in the market climate. Tonight, we're going to be talking about stories from the past. Is today's market any different from before? And most importantly, the ultimate survival tips. Now, let's get into the show. Please welcome to the show, Russell Valenti and Scott Manzo. How are you both?
Well, not in person, but it's good to see you, Sam. Made some nice memories in Vegas together, drinking some beers and cracking some jokes, and it's good to be back.
Yeah, it's good to have you back. And how are you doing, Russell?
I'm doing good. It's good to see my buddy Scott, who I saw a few weeks ago. Had an enjoyable time, and Sam, I always love seeing you.
You two are far too kind. And Russell, important questions. Do you still have your moisturizer on your desk, or?
No, I don't. Well, I take that back. I don't have my face moisturizer, but sometimes my skin gets dry. So, Jen, I just have to have some, like, my hands get dry. So I just have some generic Vaseline. Just yeah, I don't have my face stuff with me because my son stole it. So, but
Russell, I'm not used to having the second best hair on the show. It's
that's why I said, "Where's Chris?" Because he's got.
Then I'd be in third. That'd be that'd be rough.
My hairline.
You're in first, Scott.
Let's move on from the hairline conversation. That's certainly not my forte at the moment. And obviously, I don't know, we won't say how many years between you, but obviously you've both got a lot of experience. Just by way of reintroduction, Russell, tell us a bit about your experience. And obviously, at the moment, we've just seen the markets pretty much, they wiped out the whole of 2024 over the weekend. We're recording on the 8th of April. Absolutely wild scenes. An intro, and then how does this compare to what you've seen before?
I started trading in 1992. Financial advisor from 93 to, I don't know, I think I stopped in 2012. Didn't want to deal with people's money anymore. Can only imagine what those poor people are going through right now that are advisors. But now I start trading on my own. So I guess it's 30 plus years.
30 years.
So, and you see a lot. So.
And what we're going through at the moment, have you seen this before? Does it feel like the same show? Is there anything different about it? How are you feeling about it?
Well, there's always a little, I think, no bear market correction, pullback, whatever someone wants to call it. I don't know. I quit calling it a bear market. It is what it is. Severe downer.
Yeah.
I've seen different ones, and the one in my mind that's so far it's been, to me, the worst was the financial crisis. And that was my first real learning experience. I mean, there's always the epic euphoric things to the upside, but that was had me paralyzed. And because I wasn't a big shorter, I was an advisor, or you're hoping and praying. And my dad, who was an advisor, who's still alive at 91, he used to always tell me, "Son, you've never seen a real bear market until like 72, 73." And he just said, he goes, I said, "Well, what's after .com?" And he said, "Because this is going to end ugly." And I said, "This can get bad." He goes, 300 stocks will go to $1, multiple of them. And he goes, He goes, so it'll just happen. He goes, but it's bad, but it's not that bad. And then, fast forward, you see 9/11, you see different areas of things that happen in events. I call them events, and there are events, but 9/11 is still, to me, the worst I've ever seen in my life, and it'll be ingrained in me forever. And to me, this is bad. I hate to see investors and people who've lost money. It's not the traders, they will adapt or they'll die. And as Scott knows, and but they have to see, when you start seeing stuff like this, like I think I've been at most ease for myself the past week. I know it sounds so weird, but you know, I'm prepared for this, and doesn't make it any easier, but because I know what the kind of things I trade, the instruments I trade in this particular, which I didn't do because I wasn't prepared back in the crisis. So, um, I'm not surprised, but they're all a little bit different.
That's
So
interesting. No, I mean, I thought you'd say something like that, and I do think it's funny the amount of people in the past sort of week who have asked me questions. Like usually, it's not something I talk about with my friends, but like that frequency of questioning has been upped, and I think they're expecting me to say, "Oh my god, it's really," but I'm like, as like someone who just thrives off volatility, I'm like, actually, it's obviously my long term stuff's not great, but like what I do on a day to day basis is, I mean, it's pretty good fun. What about you, Scott? Just as a brief, bring us up to speed of intro, and then how does this compare to what you've seen before?
So I traded through the dot-com bubble, and that was a pretty wild time, because that was a bullish time to the upside, and then there was the crash. So it was both ways, and the speed both ways was pretty amazing, and the technology and scanners and everything was all very different back then. So that was an interesting time. '07 and '08 was definitely the scariest, because that's like, you're leaving your job intraday to go to a bank to make sure you didn't have over $100,000 in it, so that you could go to another bank to put money over there. So when you were worried about FDIC limits and going from bank to bank to bank, that was interesting times. And there was, the S&P went down to, I think, 666. Then, we're at 5,000 today. So you can imagine the prices of some stocks, like, Citibank was about to go out of business. Banks were going out of business left and right. Las Vegas Sands is doing a secondary at $3 after it's been at 100. Crazy times. Um, COVID, after that, hey, we're going to shut the world down and be super cautious, and the market's going to get wrecked. And then we're going to flood the system with money. And here we are today. This actually, what's going on, I think, today has a lot to do with the system and the world being flooded with money. But of the three prior ones, I would say that '07 and '08 was definitely the craziest. I had my two best years in '07 and '08 before 2020 and 2021 came along. Um, I was, the numbers were bigger, and I had more experience under my belt. Um, but where we're at today, the S&P at 5,000. Um, if we hang around here, this will just be nothing. But this one does have the potential to get, uh, very, very, to get very, very ugly. We're starting at ridiculously high price to earnings multiple for starters. And my opinion, when is the biggest air pocket in the market where you could really be susceptible to a major downturn? When you're paying peak multiples. I think only during the dot-com is the P multiple been higher. When you're paying 25, 26, 27 times earnings, and earnings are expected to grow 6, 7, 8, 9, 10% for the upcoming year, and you're paying peak earnings for that, and then you, instead of having 6 or 7% growth, we could very easily, have negative earnings of negative 10%, negative 20%, negative 30%, depending on what happens. Historical P multiples are about 16. They usually bottom 13, 14, maybe even 12. If we go from 280 in earnings down to $200 in earnings, and you apply a 15 multiple of that, you have an S&P at 3,000, and we're at 5,000 today, and we just suffered a 20% correction. These might be great sales. The path of least resistance, there's a difference between a bounce and a bottom, and we should probably discuss that. Today the market tried to bounce, but bottoms take a long time to form, and we can't even find a level to be forming a bottom, and bottoms happen over months or years. So while the last week the market, the spies have gone from 560 to 570 down to 495 at the moment after hours. We're filming this when the VIX is 50. You very few days you could ever film when the VIX is over 50. So the market is is very unsure now, and rightfully so. Overhead, every single person has been trading stocks. Speculation's been rampant. There's huge overhead resistance because we've traded above this level for a year. A friend of mine today, he bought stock 2 days ago, and he was down a lot of money. And this morning we get that big bounce, and he's like, I sold it. I sold it all. I'm so happy to break even. And the spies moved 35 or 40 points today. I've never seen really that big of a range because the numbers are bigger now. So think of how many people out there that he only bought 2 days ago. If you bought at SPY 570, 580, if you're looking to get break even, there's probably a lot more downside potential than there is upside potential because we got this big overhang.
Right. And I think if I can touch on that, which Scott just said, I mean, like 100% spot on. And I agree everything you said. And and these with the multiples, and I never really get too fixated on multiples, but 25 times, and where the historical average is, very expensive, and I always say it doesn't. Some people go, well, they're factoring growth to XYZ. And I said, yeah, that's fine. I said, we can trade above the mean or below the mean, especially for a long time. And like now it's, people recognize, and Scott just pointed out, um, you know, where we are very expensive. And
We're
it's
still very expensive
very,
at
very expensive. I
five
agree.
at S&P 5,000. Even if you just use that 280 number of earnings, that's now out the window.
Mhm.
You're still around a 20 PE, and that 280 number is going to be at
Right.
250 or 220 in a flash. But we one of the things that we should you know talk about a little bit. There's a difference. We can talk about investing, or we can talk about trading. Now, if you're a person like I have 3 trading accounts that I keep money in, and I have an investing account. And my investing account, I'm underinvested and have been underinvested for a couple of years. I have, I don't know, probably about 20% of my net worth invested in the stock market, but 40% of my net worth or 50% of my net worth in cash, because about every 10 years, something really funky happens, whether it's a dot-com, a 2007 and 8, a COVID. President Trump, just got elected, and he's doing, some radical things, and there's huge leverage in the system. The United States government really needs money, and they can do it two ways. They can tax their citizens, or they can do tariffs, and they're essentially the same thing. A tariff is a tax. It's just going to apply to everybody, versus raising taxes on the rich. But the government needs money, and we're doing, we're upsetting a lot of friends and allies and losing trust and reputation. So there's a lot of things to be concerned about, and it's not going to get resolved real quickly. So I think we're going to be in an elevated, volatile environment, for a little bit of time. But getting back to the trading versus investing thing, like, so my long-term money, I have, like the 20% of it in the stock market, and sure, that's taken a 20% hit. But if we get down to levels that are attractive to me, that are attractive to Warren Buffett, and you're jumping out of the basement, you're not going to get that hurt. I will push a lot of chips in the table, and I've done that a couple of times before. But I sleep well at night, and I'm not, sure, I'm don't like losing, money, but I welcome the market to go a lot lower so that I can put some, real money to work. But that's the investing side of it. Now, the trading side of it, is different. How do you handle a 50 VIX or a 40 VIX or a 30 VIX or an elevated 20 VIX, compared to the slow grinding market that we've only had to the upside for 2 years, where everybody's trained to buy the dip? If you don't get a meaningful dip in 2 years, the first dip that you get is meaningful. Probably you don't want to buy it. It's probably going to be a bigger problem. So, there's short-term trading, where we can talk about intraday stuff. There's intermediate term trading, which is probably more swing stuff. And there's long-term trading. And, that's kind of looking at investing and, in the market. And again, there's a difference between a bottom and a bounce. So when we have our discussions, we should probably, not conflate the two. There are people that manage 100% of their money for a living, and they're in the market and they're out of the market and they're flat. And there are other people that have trading accounts and don't touch their long-term money. So I think when you're watching this, consider that.
No, great point. And
It's really
you've touched on the VIX a couple of times. Just for our viewers, could you explain the importance of that? You touched on the chances of us recording and it being over 50 being slim. So could you just touch on perhaps the importance of that and what it means for the environment that we're in?
Yeah, so the volatility is so much greater. We've moved, let's see, 489 to 524. That's 35 points in the SPY today. I think we had the first time that the SPY was up 4% and went negative, and this is the biggest point move that I've ever seen. And on a percentage basis, it could be from the high to the, for an up market to going red. This might be, I'm sure it's some type of record, setting day. So when you're trading sizes, they need to be, a lot smaller. You're probably going to make or lose, even more money, because the volatility, is so great. So in markets like this, you really got to take your size down, because you're gonna, or if you're going to trade the same size, the volatility is going to be massive, and you're going to be, very emotional. A month ago, if the SPY moved up, $1 or $2 or $3, it was a big move. We must have saw 5 times today that the SPY had a $5 bar in 1 minute, on some type of tape bomb news event. When you're under the 200-day moving average, you're in like stage 4. If you read Stan Weinstein's book, stage 1, stage 2, stage 3, stage 4. You're not supposed to buy stocks in stage 4. You're swimming against the, against the tide. So they need to be very, special setups. So I have always been very selective. I try to only trade A+ setups. I like to see like 3 days in a row up or 3 days in a row down, and whichever direction that is, I usually, try to fade that move. So the move that happened yesterday morning, I think Thursday the SPYs were down 5%, Friday the SPYs were down uh, over 5%, and then yesterday morning we were wondering we're going to have a Black Monday, and the SPYs were down 4 or 5%. But if you just move 15% in 3 days on a major index, the risk reward ratio right there was like, it's time to put some chips on the table if you already didn't, have some in. And then there was a massive trade that happened yesterday with some follow through today. So you got to be a little bit more selective. If you, used to trade the SPY or stocks for 50 or 75 cents, you got to take down your size, because now the moves are 2 and 3 and 4 and $5. So you got to, watch your size, and you don't got to be a part of everything. Just sit here and watch what's going on. And when you see your fat pitch, you swing at it. If you're trying to, get involved in all this volatility, there's just too many tape bombs. There's too many extreme moves. You can lose too much money. And while you want to try to compete with some schmuck on Twitter who's posting a big number, it's plenty, most of the people are getting slaughtered in this. So you got to be very selective. You got to take the size down, and you got to live to fight another day. There's no reason for you to be, a hero. I approach this the same way. If there's something really juicy, I'm, getting excited, but I wait for other people to be in a lot of pain to consider something to be, really juicy. So I sit here and, wait for people to make mistakes versus trying to trade every little move.
Yeah, well said. And I think that's easily the downfall that I'll do at times, is perhaps just focus on too small of a time frame, try and nail some of these smaller moves, but actually it's quite difficult. Compare that to something like an opportunity like yesterday, which is, like you said, it's that fat pitch. And the fat pitches, in my experience, are I mean, it's probably not like baseball, but they're easy. Well, they're easier to hit, right? Which is important. And Russell, just building on that question, then, like, sort of the past, even like this week, last week, what are you doing, and how are you adjusting to these conditions? Are you doing anything differently to perhaps what you were doing, a few months ago?
Um, I am, because when I see uh, this much volatility, this much selling pressure, um, I keep it very simple. And this is, it's just me. Some people will scan a bunch of stuff. I will stick to exactly the same type of things. I mean, listen, if I want to trade, 24-hour trading, and go on interactive brokers and buy, and I've done some of that. Just I wanted to see how it worked at, not 10 o'clock at night, trading on interactive, or look, you can go to Robinhood and trade long, and I get familiar with that. But however, that's not. I'm just dabbling. It's like a cryptocurrency, but I have a formula that I stick to, and I stick to levered ETFs. I am an ETF person, and for the most, because you can go look at SQQQ, and they get to a point, they reverse split them, and then the momentum, they just drive these things up, and then they'll just liquidate them, because they're meant to, those products, most people don't know how to trade them, but they're trained to go to zero. And I love trading VXX. VXX, is a VIX product, and people go, "You're crazy." And there's certain guys I will talk to, um, like Eric Woods. I talk to him, and he likes to do that. I love to do that, and I have a great feel. I won't go huge size. Yesterday, I started scaling in, and that's what I'll do. I'm actually, for the last few days, I'm kind of the opposite. I'm a singles and doubles hitter. That's what I do. I don't ever try to make a killing. And people, say, "Do you get infatuated with guys that trade huge size?" I really don't, because, you know, I stay within myself and my own risk tolerance. I'm 60, and, I just, but when I have a chance to really knock them out of the park, and I will tell you, I've had probably 3 or 4 of my best days in 2 years.
Wow.
And
Right.
so it's a complete opposite because I'm using SOXS, I'm using the SOX, the semiconductors. Don't get me wrong, I don't recommend it for everybody and I'll trade them long and short. I'll trade the short long and the long short. I mean,
Russell, you don't hold those overnight or long periods of
no,
time.
no, sir, because I
No,
know
right. These are, you need to make that clear. These are
correct.
specifically day trading instruments because they do reset at NAV every day. So when SOX holds at 30 and now it's in the eights, it's not going back to 30 unless we trend there over,
Right.
we get a couple percent, each day for 30 days. When it does reset, if the SMH is up $5 is up 5%, then the SOX will be up 15%, and 15% on $8 is $1.20. So instead of, so you got to trade it with a different size. But just to clarify, because
People,
that happened to me. I lost a fortune in the VIX trade because I chose the wrong instrument. I bought the one that went down instead of shorting the one that went up, and that was at the time, the most expensive lesson I ever learned, and now it ranks as the second
yeah.
most
And
expensive.
so, like I think we talked about it. I think I've discussed in different podcasts the XIV back in the day when all those things went to zero. It was my biggest loss ever because I was swinging it, and it something didn't seem right. And I read this things could go to zero. Well, I didn't know it could go to zero after hours. And I'm at the gym, and I had 5,000 shares, and it was 20, and I paid 90. It was 20, and I'm like, oh my god, like and of course you're on defense, and you're just like, but it's a day trading vehicle, but has so much range, and it doesn't matter. You know, I'm not looking to take $1 or $2. If I look at the VXX, and I play them long and short. I mean, today, I can look at it. A lot of times, I've changed my time frames in these kind of markets, how I do things. But there's an I played them today, and as yesterday was I use a lot of size. Today, I used a quarter of what I did. And you know what? You can have
Yeah, the setup was
it's
golden yesterday. It was just today
it
was
was perfect. And sometimes, I try. I'm talking to my son, and I'm trying to like, hey, you have to look out for this because they do fool the masses. I go, maybe and I said this to him today. I go, maybe they shake people out, on the S&P, the lows of yesterday. And he goes, well, why did you see? I said, it's fear. I said, I'm a fear person, not for me, but I watch when people they're ready to liquidate long-term portfolios. And it's the fear and greed. And like I said, I feel sorry for the investors. I can handle it, and I'm pretty smooth with that.
well,
Um,
that comes from learning your lessons over the years. You've been
right,
seeing enough times to know, not to do it. This might be the first, bad sting for somebody that's only been in the market post COVID. Well,
right,
2022 was pretty ugly, but if you've been trading 23, 20, just the last 2 or 3 years,
yeah,
you're getting a little taste. If you're a small cap short seller, you've probably been stung a few times in the last couple of years. I know I have.
yeah.
But
Amen.
yeah,
And I trade like very few of those because the volatility is tremendous. But I stick to and I will trade certain Nvidia, but I would say right now I'm just a range trader. I mean, I use a lot of bigger. I saw a tweet from Lance um, today, and it was great. How are you adjusting to this?
you
And
follow that Furu, Lance?
yeah, I mean, I know he's fake and everything, and I we're
taking
kidding.
a shot. Lance is,
He's
Lance is, yeah, one of the greatest traders,
100%.
in day trading history.
And listen, when someone like him says something, and just an old guy, I don't care if it's you, Sam, I don't care who it is. I will sit back because as you get more experience, I will listen to what someone else has said because I don't know it all, and I don't tend to. and I
Well, the
just
game's always changing too, right?
it's always changing. And you know what? And that's what we I think Sam knows this, you know this, you've been around. If you're doing the same type of trading like I was in dot com and even in early 2000s and even in, financial crisis, I said, you know, and you're just not doing anything because you're paralyzed. You're looking for a balance. And I was like, God, I kept small losses, small losses. And I said, I'm very calm because I'm just I can see it very clearly using some bigger time frames. And yesterday was a prime example of of what I'll look at. So if I'm looking at, I'll trade a lot of spies. I've actually been dabbling more in the ES futures. um, so been 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 very interesting. It's just something, you know, I've been doing. However, don't want to get too heavy in that because right now, because I have a pretty solid foundation of what I'm doing, and so I will trade certain things, and
So
so
Russell, we'll like it sounds like you just intraday trade, and that's what I do. Um, I'm just intraday. I'm in cash every night, with the exception of the long-term investment account. So, but other people are swing traders, and swing traders without a plan become investors, and they're buried now.
Yeah.
So, like, how if you had to give advice to those type of people, would it be, look, pick a maximum number that you want to be left with? You had $200,000, now you're down to $120,000. Um, doesn't matter what the market does or what you think. You're stopping out with 100 grand, and that's it, and you're regrouping. Like, what's your type of advice to for somebody like that? Because while we just intraday trade, whatever we make or lose during the day, we reset the next day.
right,
But there are a ton of people out there, um, inexperienced or even experienced people, that if they let their ego get the best of them, and I'm going to be right, I'm going to be right, and the risk management, you find out who's swimming naked
yeah,
when the tide goes out. Um,
and being
so
right.
would you just recommend, like, picking a number? Because that's what I would tell somebody. It's like, this is the most amount of pain I'm willing to endure. It'll humble me, but I'll come back to, fight another day. And when market conditions get better, I'll be there. What
Yeah,
would you say?
you know, I think you have to have, regardless of how we trade, and everybody's different. People have jobs, people are part time. If they're, I'm not a great swing trader. I admit it. And back in the early days when I first started, it was fantastic. That was my thing. I just couldn't. Overnight, I can trade, for position to here or there, but right now, you know, it's protection of principal, protection of your capital. So if someone has X number of dollars, um, and the hope and praying like it's gonna come back. Well, that's not a strategy. And people say it's gonna come back. I go, but from what levels? I said, I don't know, and I don't because
Well, you're not trading then, right?
I'm not.
You're investing.
That's
Right,
it.
you're investing, and so the people that swing trade, um, I had a personal thing, Scott, when I was swing trading, and I used to say when I first started out, and it's well documented. I used to uh, the easiest time. I still think it was the best trading market for dummies like me. My dad used to say, "You're not smart, you're stupid." He goes, "You're lucky. You're in the perfect environment. May not ever happen again. Just buy breakouts." I mean, literally buy breakouts. I'm making 30 grand a day. I'm smart. He goes, "No." He goes, "When it stops, you won't know. You'll keep thinking it's going to do." And of course, I had great I still have great risk management, but we get caught in stuff, it's just the facts. But to answer your question, I think you have to um, swing trading, you know, obviously trade less size and keep it small. And I think that's the most important thing because you'll have so much, there'll be the opportunities will be enormous at some point. But to your point, It's a
Well,
very the mark. I don't know where we go to.
right.
Yesterday,
So how
a
do
lot.
you, what's the advice to cut the losses? Or Sam, what do you
Well,
think about cutting?
when I was just, do you know what I found interesting? Well, what I find interesting is that we've got two vets who have been through a lot of these cycles, and like one of the first things you're saying is it doesn't need to bounce. It doesn't have to be a bounce. It doesn't have to be here. And I think like that's where like we get this sentiment where like, well, we've fallen, what is it, 20% or whatever. There's no way we can go any lower. There's no way. And I think then people get a little bit comfortable. They might be down in their position. They might be adding to their position. And you can picture then all of a sudden you've got that extra size. All it takes then is one leg lower. And you're talking about, preserving your last 100K. All of a sudden that gets
Right.
cut again. Right, Scott?
Well, when you say, Scott, if you're a swing trader, I mean, I can tell you, like, lighten up when and this is a very, consult your financial advisor, but lighten up because that it's going to come back, and things come back and things happen. There's new companies that are born, but you know it's it can take you out, and what good is it? All the hard work you've paid taxes, and what good is it? I'm all about longevity.
One of the risk management tools that I think people like kind of overlook. You can be in a losing position, right? And when you're in a losing position, you're like, oh, should I buy more or should I get out? And you should really, never buy more unless it's a better setup and you had a starter position, um, and so forth. But you can also reduce size in losing positions, right? You're expecting something to happen, it's not working. Maybe I want to keep a piece on, but I got to lower my risk exposure because if I take another max loss with this size, I'm in a lot of trouble. So maybe if I don't get fully out, maybe I should just sell half my position.
Mhm.
And then if conditions get better or you get your signal and you want to go back in full size, if you pay $1 or 2 or 5% more, it won't matter. But you don't have that same risk exposure,
Right.
um, on the same thing. The uh, I think it's good to, talk about what to do when you're in trouble because right now I think about everybody is probably in trouble. There's a couple of fat tail people that, always have protection on for these type of things and their results over years are terrible. And then all of a sudden they have a massive year. Somebody's up 100, 200, 300, 400% this year with the moves on the spies. And, they had way out of the money puts and they always have that protection on, but that's not our average investor. Those are the, the hedge fund guys. But, you know, uh, I think risk management, whether you're day trading, swing trading, or even, long-term investing, it's like I don't, I can take down my exposure some, or I can get completely out and reevaluate.
Mhm.
But during emotional times, which we're in, um, it's good to have a plan in place beforehand. I came into the office on Sunday and sat down for 4 hours. I looked at all these charts. I decided what instruments I'm going to be trading, for intraday trading. I don't really trade leverage instruments, but as you talked about, you do. But for Monday, yesterday, I had my list. If I'm trading, the biotech index, it's gotten smashed. There's the LABU. Do I go long that or do I short LABD? Do I go long SOXL or do I short SOXS? Do I buy the FAS if I want to be in financials? So I'm kind of like planning these things out beforehand. Now, if nothing happens on Monday and we just go back up, you could say, oh, you wasted your time. But this is just all in my memory bank. I'm prepared for the next day. I have a plan. If this happens, I'm going to do this. If this happens, I'm going to do this. And it even moved too fast for me. I ended up having a nice day yesterday, but not in the long side on that 20-point fake news spike in the thing. I ended up shorting a bunch of things because the divergences were too crazy. I made $5 and then watched something go down another 20 from where I covered it.
Mhm.
But I had a plan in place, the instruments I was going to use, and I wasn't in a panic mode. Where
Yeah.
where are most likely resistance levels? Where are most likely, support levels, and they're just guesses. I mean, when someone's getting liquidated or someone's forced to cover a short, you can throw a lot of technicals out the window. But that's why you wait for extremes when times like this are volatile. So, do less, trade smaller amounts, have a plan, especially on the risk management side, what instruments you're going to do. And I would say those are the, type of things that people that maybe haven't been in the market, quite as long, should, try to incorporate into, their game plan. And if you have been in the market a long time and you're successful, you're probably already doing these things without me, bringing them up.
Right.
Yeah.
And when you see, um, one thing that sticks in my mind, and I found a bunch of journals of mine from .com to financial crisis, and I don't keep everything on my computer. It's just I write down notes. I still do every day, and I write things because I think you see things. Some of my best trades, um, and sometimes as I've gotten older, I have found that I used to be a great trader as far as 9:30 to 10, not so great. The numbers speak for themselves. However, pre-market, I'm trading a lot more now in pre-market. Maybe I'm not the size, but I'm just kind of padding my orders. And it for me, but then I remember Nate said something like categorize your trades. And it hit me that's to me, it was always, and I tell that to my son, it's very important. If I trade pre-market, I'm out before pre-market. Like, I'm just that's just me. I
Yeah,
said,
we all have our, I think, we have our routines. I do the same
right,
routine every day when I get in, and it's probably like antiquated. And I should probably change it a little bit, but it's my comfort zone. And when I do get a new piece of information, a new news service, a new scanner, a new someone in the chat room that's got my attention or something, I do incorporate things, and I always try to keep it dynamic and not, always adding and subtracting to find out what's the best, latest and greatest tools that people are, using and what's working now, keeping an open mind.
I have noticed what personally helps me. Um, I may have CNBC on. I'm not like the CNBC guy, Sam, but in the morning, just I just like hearing, and everything's, it's whether it's political, whatever it may be, and it just gives me a feel. I don't really care what they say because I'm going to do exactly what's in front of me. I'm driving my car down the interstate, and I'm staying right in my lane, and I'm looking straight ahead, and I have my marked out areas, and I use multiple time frames. I know where the dailies, but I use a lot more weekly now and a monthly. If you go look at a monthly on the SPY, laid down to major support. I mean, did it in COVID on the SPY, on the QQQs. If you go down back out a week and go back out. So I suggest to people look at the bigger areas. And yes, there's they can talk AI is going to be this, but we really don't know because a wise man once told me, he said all stocks get cut. And I remember I tweeted this to Ariel, and really smart guy, very informative. And I said,
Yeah, he's fantastic.
he's fantastic. And I appreciate because he, and I admire that because, but I said, every stock, every great company gets cut in half and then some, maybe 50 to 75% multiple times. Apple's, you can just go look at it. JP Morgan. It doesn't matter what it is, multiple times. And I always say, make sure your entries are more precise right now.
Yeah.
Um, and,
Yeah,
and
you mentioned looking at daily and weekly, and well, so I have a 1 minute, a 5 minute, a daily, a weekly, monthly chart
right,
on those are my different things, and I have a 20, a 30, and a 50 moving average and a 200 moving average.
yeah,
And when I get into an area of support or something that doesn't hold, then I go to the next support, the next support. So I was in here on Sunday, and I'm like, The SPYs are going to 473. If they don't hold there, they're going to 467. If they don't hold there, they're 456. And I think 56 and 67 were meaningful numbers on the, the weekly or the monthly, or they were major gap fills. So those are the technical, levels. So I have those levels, in the back of my head that, oh, gee, it's crazy to think that we could get there, but it's crazy to think, what just happened. So, looking at those longer term levels are important, especially from the investment side, or where if you can get multiple things to line up all at one time. If it's a third day down and we're spiking down to 473, then you've got like confluence of trading things all coming together. It's the third day down, the VIX is over 50, we're into a major weekly 200-day moving average on the weekly, and that's all lining up. Then that's a place, where we're gonna, have confluence and have some confidence to put some chips on the table.
Yeah.
I tell you what, I've got my son to do it. I do it because my mind is not fast twitch like it used to be. I'm not like I was 30. And I have noticed, it's like athletes, they can't throw a baseball as hard, just stuff happens. And I can process, I'm a visual. So I mean, I use like besides everything, the bigger picture, I mean, like, I'll use I look at the SPY and maybe I'm trading it a lot more. And I'll look at an hour chart, 15-minute matches up. I said, and then I circle out like the longer term, 4 or 5 days, the gaps. And I know, yes, maybe it could, but it could swipe into there and fail. And I said, and the market will do what it has to do to fool everybody. And I've been where it breaks down, and then all of a sudden they flush those areas, and you've seen this. And I'm the one that I don't put hard orders, but mental orders I will stick to them. Like I'm very disciplined about taking a loss, and I'm an emotional crying person with a movie or helping some poor person, but as far as I'm a robot and that's just how I am. I go, I have to stick. And even what I do, if it's not working, I always have like a three rule. If it's not working, I think all of us can say we took a trade, long or short, no matter what it is, and it doesn't work out. You can look at it. You can give your own report card. I'm sure. So can Sam. So can me. I said, I can't believe I did that. I said, but sometimes maybe I wasn't prepared enough, and it happens. And that's why to me, like swing trading is just there's more risk on with that for sure. And I always think the market will do what it's going to do. And
Yeah, well said.
I think risk management. When I was talking to Josh uh, Chernak yesterday or Saturday, I said, Josh, you sent me a message and it was one of the best things I ever heard. And it just made sense. It was very simple. He goes, there's younger individuals who haven't seen this kind of action, whether it's traders, like you said, Scott. Investors are separate. It's a different, where's your age? Where are you at? And that's a whole nother story. But Josh, and I I wrote this down, and it was just stuck with me. And he said, you know, what they should be doing, don't trade. Sit back for 2 weeks and watch the tape. Watch things because you do learn. And I know it's so. And I go, well, you find the advice you're giving to whether it's friends or novice people, and he says, no, they can listen to the news. I mean, I have a news feed. I have, but I don't. I know the news. I watch the reaction, and I'm like, yes, there's things. Like in 2016, Trump will tweet something. They go, oh, market's going down. I'm like, I said, look, most of the time it hits areas. I mean, yesterday, all that fake news on the tariffs, um, I said, even my son, who's 26, he goes, short the spy right here. And I'm like, going, and I go, yeah, I've trained you pretty well. And he goes, it's a trade. I said, because it's in this area. And I go, yeah, I see on the hourly, I see on the 15-minute. And I said, because I get him to mark out lines, watch gaps, and keep it very simple. And he concentrates on one thing, the S&P.
Yeah.
And
Cool.
yeah.
You,
And so
you let him do that. There's like no edge in trading S&P. That's hard stuff.
he had a 5-figure day. He had his biggest day ever. And I don't know, were you guys at Traders for a Cause? My buddy
You,
Tyson Muse.
you both weren't there this year. I was there
Well,
drinking.
Yeah.
I was
I was
drinking. I had to find new drinking buddies, Sam.
so you're down in South Florida. I had to deal with a hurricane coming
Yeah,
from.
right. It was
I
a
had,
bad hurricane. A lot of people missed it.
my buddy Tyson Muse, and he was a sponsor there, and he's just a big gregarious ex-football player.
I think he was a sponsor at the blackjack table. Also, I think I saw him
Oh
at the
yeah,
craps
he,
table
he's a big player.
the whole weekend.
He's taught me so much about options. I don't trade like he does because a lot of risk, and he has a way to do things. And I asked him, we spoke today, and there was someone else that we all know that was on the call, and goes, well, I don't understand. I said, Tyson, where did you make all your money last year? And he said, 85% of my money I made last year was trading S&P, S&P options. Now, listen, options aren't for everybody, you know. And he said, how about the year before? And he's a 7-figure trader. He goes, year before, S&Ps. How about year before? S&Ps. And so, you know,
It's more the exception than the rule, though, because the S&P is, that's more for macro and institutional stuff. It's hard to have an edge on that. A lot of it's just, kind of based on
he's
tech.
more of you know, they consider him an institutional trader. So he trades, he's a
Yeah,
very
you better interrupt this love fest that Russell and I are having and ask the question.
Like I'm trying to sneak away in, but you two are like just rattling off each other.
Yeah, what do the people out there need to hear
Well, that's
instead of
yeah.
Well, no,
instead
it's
of
a
what my
great thing
drinking
about having
story?
three of us on for sure. One thing I am keen to just pull back on a topic you just touched on, Russell, and ask you both is you touched on news and you touched on staying in your own lane, but at the moment we're in a really headline driven market, whether it's tariff, whether it's Trump tweeting, whether it's something from the White House, whatever it is. But like, how are you like filtering through the noise, and what are you actually looking for? Because one of the things I see, and it drives me a little bit out of the wall, particularly when they make it public, is people trying to speculate about what's going to happen, as opposed to just see the news, be prepared for said reaction, and then react with that price. What do you think about that, Russell?
I definitely, the advice I give this to myself, and I would give it to anybody young, and it's what works for somebody. I I won't get on Discord right now. There's people I talk on Discord. I shut it off. I want to be really focused. And yes, I use room on, and I appreciate, because there's all different personalities, and I always get something out of it. And I love the pre-market stuff. However, I have my plan, and I do not have Twitter on during the day. I don't want to see that. The CNBC's on, the volume's off. It's useless to me. It's really, but that's me. It's useless. I see, you have a news feed. I see the news. I'm like, okay, and I watch the reaction. And for me, that's what I do. And it's made me, it takes away the stress, the anxiety. And
Yeah.
sometimes in mornings, I have anxiety. Used to never have it. And some of my best trades are after, like Scott, I always appreciate him. And this is part of our love fest. And he's a sniper, and I learned a lot from him, because I just sit back and I don't need to trade, because I said, watch this 10:15 Eastern time. I tell my son, watch this 11 o'clock. And there's something with different times, and people can agree or disagree. And I said, and watch the areas of, and just of your time frames. And I said, just go. I said, yeah, that Trump tweet came out, or whoever's tweet, CNBC, and I said, and look where it stopped. It stopped perfect on the 15-minute and the hour. I said, the hour, I mean, I'm like, right, resistance. I said, isn't it amazing? I said, he said, yeah. And so, you know, he goes short. I didn't. And you're trying to teach, but everybody's got to make their own mistakes. But make small mistakes, because this is not. Scott will tell you. I think Sam, you can't be a hero. And one of the things I learned, I will say, I learned in .com is everybody was making a ton of money and easy. I think it was still, to my day, easy. But that's hindsight. I didn't learn anything from it. 9/11, 9/11, when markets shut down, financial crisis, that's where my lessons were learned. My big losses, that's where it was learned from me. However, I remember some headlines for the media. I ignore media. I ignore analysts. I may see the big picture, and I put in my banks, but I don't. I ignore it. And I have to, because back in those days, in the financial crisis, Warren Buffett, the headlines were, you can go look him up, ask ChatGPT. He was washed up. He was a has been. He was this. And now, how many months ago he's he been just raising cash, raising cash, raising cash? Now, this was before, like,
Morgan Stanley
January,
downgrades Rio
raising
Tinto
cash. I said, but no one's talking about. They'll say it, but I'm like going, and I'm not saying I'm not Warren Buffett. My time frame's different,
Yeah.
and I don't have that cash, And
I think Warren Buffett, I think he's the only guy, I think out of the top 10 richest people on earth, I think he's the only one that's made money this year.
Yeah, that statistic.
Obviously,
That statistic came out yesterday. So people are paying a premium now for all that cash that he has. And speaking of Buffett, he is. We don't have to tell you how good he is, but you see Apple down here at $180. Keep in mind, Warren Buffett was happy to sell Apple at $180 9 months ago before it had this big move up.
Yeah.
So you see it at 180 and it's like, oh, it's down from 240. And you think because it was here, it's a value here.
Mhm.
Get that out of your head, and that's wrong. Sam, to answer your question, how do you block out the noise? So this is what I do for a living, and I've been doing this profession. I was a broker for 8 years, and then I've been doing trading since I think 2002 or three, my own money. I go to an office every day. I am in gym clothes, but I approach this job as this is how I feed my family, and I'm a professional. You might meet me and think, oh, he's a day trader, he gambles for a living or whatever. I'm a professional, and I take my job very serious. I have my blinders on. I have my room that I'm very comfortable in. It is very important to approach this as a professional and not as a degenerate gambler and not as somebody that is competing with somebody else. It is you. You are, your record says you are, and it doesn't matter how anyone else is doing other than me. So I don't like worry about the FOMO portion of it or being a part of this trade or that trade. It's not my setup, and I stick to my knitting. There are people that have the skill set to trade 4 or 5 different styles to be in a suite. They can have 20 positions on their screen, and some of them are swings, and some are longs, and some are shorts, and some are penny stocks. I'm trading 2, 3, 4, 5 times a day, and sometimes zero. But I approach this as I have a lot of respect for trading because I've been burnt bad so many times that I'm always on my toes doing my routine, and I don't give a damn about um, all this other stuff. If you mix the politics with the trading, um, you're adding an element of emotion into it, and that is a very bad recipe. You need to be myopically focused on your trading and approach this as a professional. Anything less than that, you're stacking the odds against you, because people who are professionals Um, they gather a lot of the money, and the really great minds, they gather a ton of money, and the great algorithms gather a ton of money, and that's who your competition is. So you need to keep that in mind. I wish I was playing against, sloppy people all the time.
Mhm.
But you're not. For the most part, you're competing against really good people. So you need to be a professional about it yourself.
Yeah, well said. And just touch on it though. So how, like, obviously it's great to be within your own bubble, but like at the moment, like yesterday, for example, we had a Trump tweet that apparently the tariffs were going to be paused for, what was it, 30 days or something like that. Turned out to be fake. So we went from like a really positive headline to a negative headline. And obviously we had like an incredible reaction. So how are you differing from what noise is relevant to you though, Scott, in terms of like that versus obviously a lot of the other crap that we see on a day-to-day basis?
So, Sam, that's a great question, and I have like a different, toolbox than most traders. I work with another trader. We have a Sky a Zoom call where it's just voice. So there's an open voice channel. He works from his house. I work from my office. He's a great news trader. And he has a lot of, whether it be Bloomberg or Reuters and ability to just filter out news. Also been trading a long time and knows what's real and what's not and what's old because he reads a lot of research and things like that. He provides that value to me, and I'm good at that on my own, but he's even better at it. So when you put the two of us together, it's really nice. I pay for Trade the News trading service. They're pretty fast, they're pretty early, they're pretty accurate. Um, Investors Underground chat room. There are a couple of news traders in there that are from President Trump. Hang on, one of my
So is it, that's Trump tweeting right now, isn't it?
yeah, that's just so if you want to, specialize, dig a little bit into technology, um, you can get things read out to you. There are lots of advantages of things where if you put a little effort into it, you could find out, what are the best tools. So to find out first, getting back to it. So Investors Underground, um, there's three or four very reliable people in there. In addition to that, they have the AI news, which is seems to be very, very good. And if they do if a story's old or wrong, someone usually corrects it pretty quick. So between that combination of things, that helps me filter out a lot of the BS
Mhm.
as to what's true and what's not. I've also been trading the markets for a long time, and I know what is likely. What is more likely if you're newer. You shouldn't even be trying to trying to play
Yeah. But
that
then
game.
Scott, you'll also have the skill of knowing that yesterday, if we get a positive tariff of tweet, whatever it is, news, whatever, that actually that's probably going to lead to a positive market reaction, right? You're comfortable with that. So how have you got yourself finely tuned with actually what news is going to be, important to your trading?
So reading research helps sometimes make money and sometimes to keep you out of trouble.
Mm.
Knowing what time the president is supposed to speak, knowing what time China is supposed to make its decision, knowing, are there any Fed speakers today? Are there things like that? There are Trade the News has a morning calendar of everything that's about to happen that day. Um, Vital Knowledge is a service that people should subscribe to get that newsletter. Adam Crucifilli, he runs down the market every day, has a great read on the market, what's important, what's not, why the S&P could move higher or likely to have a lot of resistance. He has a good take on things. It's all homework. It's a matter of how much you want to put into it.
Yeah.
How much do you want to work? Just know that your competition and the people better than you are working longer, most of them have worked. They still work very long hours. They're still working very hard, and they're passionate about it. So it's not even really work. And then you have other people that are just absorbing as much information as possible, trying to be as great as they can, like Short Bear Lucas. These are the 5 books that I'm reading over the next 2 weeks. I'm going to summarize each one of them. And probably photographic memory. You got to put the work in. There's the shortcut to this is to find out that there's no shortcut and start working really hard, really fast. And that's how you're going to get, that's how you're going to get better. And you want to, surround yourself, with not like-minded people, but people with similar work ethic. That you trust, and you trust their opinion. Trust is a big thing. There's, there's tons of people posted in there, and I know, my 4 or 5, go-to people. I know when Chris posts about, options and S&Ps, and we could expect, maybe the bigger move tomorrow or the next day. Other people are really good at, levels, support, resistance, failure levels. Build yourself a little community with some good tools, and be prepared to work hard. I'm out of here at 4 o'clock every day, but I'm in at, I don't know, 4, 5, 6, 7, mainly, mostly 6:30, 7 o'clock. But Monday I was in at 5. I didn't want to wake up at 4 because I might be a little too tired to execute at 10:30 or 11 o'clock or 12 o'clock when something big happens. But if the opportunity there is there for a big trade, and you don't take the time to prepare for it, I only had 2 glasses of wine on Sunday. I was proud of
Oh
myself.
wow! So it must, but that's that's the
I
thing.
didn't have a whole bottle.
I was gonna say that's what's striking me is like as well is like, and I might have said this last time you appeared, but like just like how much you put into those big moments and how much you're putting in daily as well. Even though you're, a couple decades into your journey, it doesn't mean that you're not working 12 plus hours a day.
No, this is
It means you're not working.
day trading is not at the beach on a laptop. Some of those young kids can do it, but I approach
I can do that.
trading as a profession. If I was an architect, I'd be in my office just like I am now, drawing up my plans and working all day, and I wouldn't have music. I'm not going to have distractions in the background and all that stuff. Nate runs the room. You want to talk about coffee and donuts, or whatever it is. We have a separate room for that. This is all business, and that's how I approach it. All business professionalism. If you're not going to put in the work, or not going to put in the time, and you're going to goof off, you're going to get shitty results. And if you trade for 25 years, yeah, you know enough where maybe you don't have to prepare. But if I miss some like easy money, um, that bothers me. And
Yeah.
most of the time, most of my bad days are probably good days that I didn't capitalize on big enough. The losing days are going to happen.
Good point.
Yeah.
That's a good point. I mean, it's that's what's interesting about people like Scott, and there's a common thread. And what I found people, and listen, not everybody's going to be Kobe, Michael Jordan, Tom Brady, Patrick Mahomes, you name it. There's only so many. And I said this the other day. I just want to be the best. My goal is always to be the best third string quarterback, with longevity. And I go, you know what? Because my wife says, you should write down your accomplishments. I go, I, I don't feel it. She goes, well, you haven't blown up. You've provided, to what Scott said, you've provided for your family. You've been through divorces. You've been through so much stuff. And I said, she goes, it's a big accomplishment. And she goes, how many people do you see fall off of Twitter, or that you go to Traders for Cause and you don't see them? I said, well, it could be a lot of different reasons. However, I said, some of the best traders I do know, they've never been on Twitter in their entire life. And I've literally seen a trader that was worth $125 million and who had everything, and he lost every single thing. And because then he started leveraging. And, when you start talking about stocks, how low can it go? It's amazing how dumb a lot of CEOs are. And I've seen, there's some I know personally, publicly traded companies. You guys will know them. Their companies are so leveraged. And why is it at the bottom of stuff they have to unwind it and they have to sell stuff because to keep, or they've leveraged their own personal stocks. Bill Ackman, when he had Valiant, I'm like, I'm just watching, I'm going, this stock's going lower. And you watch it and watch it and watch it until you couldn't take anymore. And I'm not picking on listen, they're worth way more money than I'll ever see. And but I can look at it objectively, and it is hard managing people's money. I will say, don't I just, it's a hard thing, and on that kind of basis, I this is when you should be you're working Saturdays and Sundays. To Scott's point, I mean, I'm up at 4 o'clock in the morning. Do I want to be? Well, not really, but I'm up at 4, having my coffee. I'm either at the gym, doing whatever, and I'm here till, I try to leave like Scott, like at 4, but then I'm starting to look at stuff, and and you know, I'm trying to take some real vacations with my wife, you know, and I was embarrassed, but I've never taken a month off. And you start getting burned out. So I just I'm not bright. I feel like I've been around, and when I have, people that come in, and Scott's seen it too. They have, out of college, and they went to Harvard, and I got a degree in finance, and I'm very honest with them. And I say it out of respect. I go, you might be able to build rockets, but and I said, when you're coming at 9:30 and I told you to be here at 7, right there's 2 strikes against you. I said, this is not what it's about. And,
It's another indicator of like top of the market, or we're getting close, is how many of my friends, because most of the my kids are a little older, but my friends' kids are all in like college and graduating college, and it's how many phone calls did I get in 2024 that, hey, my son or daughter is really into trading, and you've been successful at this, do you think you could sit down and have a conversation with them? And I'm like, yeah, I'd love to help them out. Have them read these 2 books and watch these 3 videos, and when they're done, have them, give me a call, and we'll sit down and make some time. So I'm not going to, just talk to them right out of the gate. Show me that you want it a little bit. Like, so you get 5 of the 6 of those calls a year, and then one of them, puts in the work, and then okay, then that's the one I'll work with. Not going to, waste my time. Show me you really want it. But it's almost like an indicator of like, everybody seems to be trading again.
But how many phone calls have you had this week?
I just got 3 phone calls. I have my phone on silent from my uncle. So I have he it's those usually only come when there's blood in the street. So it'd be an interesting.
The
Well,
opposite.
he's a lot. Well, he's a very successful and smart person, but he probably just wants to talk
yeah.
talk some shit. What else you got, Sam? How can we help people?
I'm just thinking we've come
We
to
can end it.
No, I'm not going to end it. I got one final question that I want you to dive deep. And and I don't know who wants to go first, but what would you tell your younger self in this market right now? What would you tell yourself? You're 3 years in, you're 2 years into your journey, you're facing this market now. What's that one piece of advice that you'd be like, this is what you must do to make sure you survive? I know we've covered a lot of it tonight, but nail it down to one.
Uh,
That's a good question.
I want to answer it with something that doesn't really answer it, so I'm gonna have Russell go first.
Thanks, God. But that's okay. It's wonderful. Um I, I would definitely say, if I had to tell, get around people, um, you know, learn different strategies. And it's the old saying, get good at one thing. I kind of feel like my son is good at one thing. Don't know if he has the passion. He's young, and they just want to make money. And um, I said, I think there's some of the worst things you can do as a young person, whether it's cryptocurrency, whatever. And I've seen it. I've seen some college kids this year make millions of dollars off of meme coins. I said, most important thing is how much are you going to keep? Okay, you got to pay your taxes. How much are you going to keep? And because they think they're brilliant. You're not brilliant. And I don't care what your education is. I go, I didn't finish college. I said, don't think you're going to outsmart, like Scott said, the algorithms. There's people that are so much smarter who've been around. Um, just try to get good at a few things and be humble and just listen. You know, this is how I do things. I would go to individuals like Scott, and like if he's willing, if he sees you work, like my son's friends want to come in here all the time. And I say no, because I'm not here to teach one trick, because they say, oh, that's their response is, oh, if he can do it, I can do it. I go, 30 plus years. I go, that I've paid the bills. I've paid my houses off. Don't have any bills. Live minimal. And I said, you know what? That's some of the best advice I can give. And learn as much as you can. It's not it's hard, and when you're supporting yourself is one thing. When you have a wife, children, it's, as Scott knows, it's hard. And then, I can get past things in a day. Bad day, maybe two. I can get past it. I may just sit back and watch the action, but it's my younger self, I only knew one style, and I write down everything. And when the more trading journals you have, and it doesn't have to be complicated. um, why is this not working? And when it's not working, that's kind of your job to find out why it's not
Yeah.
working. And
But
every and learn and know the environment you're in. That's what I'm finding. Most people do not know the environment has changed. Wouldn't you agree that
Okay.
most of you guys? I mean, they
yeah,
don't
so
know.
I think that goes back to um I had done another interview and talked about like the trading environment. The subtle change starts to happen, then it becomes a very, very big change. Knowing the environment, like the weather, which this thing won't stop talking. Um, uh, so I think Russell nailed it when he said become an expert on something, specialize in one thing. Like I gotta just turn some stuff off. Um, become an expert in one thing. And maybe you won't be able to master it because there is no mastery. You can't do it perfect every time, but you know, specialize in that one thing, and then if you learn how to do that, you can branch out into other things. Number two, know the environment, which goes back to offense and defense. Everybody can put up the winners, but now is a time, if this is not your environment, for you to be playing defense. You've made a bunch of money. You've had a drawdown of 20% or 30% or whatever it is. Don't worry about the high water mark. This is the amount of money you got today. I so this I had 20% of my money in the S&P last year and 50% of my money in cash. So last year I made 4% on the cash and 25% in the S&P. Now we have a 20% drawdown. I have the same amount of money now as I would have had if I would have had 100% in equities. I just got there in a different way. But I look at it as though I didn't take a lot of risk. I had my 4% last year, and I'm at the exact same amount of money as if I would have had the money in the S&P. But I don't feel bad like that was my high water mark and I gave back all this back. This is what I've got today. This is what I've got to work with. Is it worth making a trade today with this money? Um, so, should you be playing offense or defense? That's a big one. You got to keep yourself in the game. And when things aren't going your way, so don't spend all your time trading. Spend your time educating yourself, being a better trader. watching some trading videos, reading some market wizard books, reviewing some YouTube, educational videos, a couple of my videos or your videos, Russ, or the great work that you've done, Sam. I know that's 5 or 6 different things that I listed.
No, it's perfect. It's perfect. And yeah, perfect. And a great way to wrap it up. That's all I got for you guys. I just want to thank you so much for your time. We've just done, like, in an hour, we've gone through, was it 60 years of experience between you? It's always an absolute honor and privilege to speak to you both. It only comes second to when I get a chance to beat Scott in any drinking contest.
I think that's why you didn't show up to Vegas this year. Is you knew that I took one for the team the year before, and this year put a little wager on it.
Well,
Sam, you have some drinking skills that are beyond belief. That throat opened up like a porn star. Unreal.
What came,
You're gonna edit that out?
no, we'll keep that. I have no control over the editing. So, I mean, I was going to say on that note, but perhaps not on that note. But again, just thank you both for your time. It's a real honor. And yeah, definitely. I mean, we don't know where the next event is. Rumors of a few places. I'm secretly hoping it's East Coast, just because it makes it easier. But I'm definitely going to be there, and I'll be. Yeah, I'll give you your rematch, Scott.
Yeah, those traders for a cause events, those regional ones were just unbelievable. I went down to the one in Miami because I live, a half hour away. Talked to Mike Bellafiore for
I didn't
20
know
minutes about life. I
I didn't know you were that close to Miami. I would, because I was there in January, because I went to
Hanson.
yeah, Lance's launch, and that's the first time I've done like a smaller trading meetup.
I couldn't make it because I was going to go.
Oh, it was great. I talked to Mike, I talked to Lance, I talked to Short Bear, I talked to Stan Glusman, all these, great traders, great people, and you just and then afterwards, you and I, we got to go to Joe's and eat some crabs and
Fried chicken.
have fried chicken, burgers,
What a time! What a
grilled
time!
tomatoes, good stuff. Like, put the effort in. If you you want something in return, bring some value to the table. Go down there, educate yourself, meet some people, shake some hands.
Yeah,
You
and never be scared. The very first. By the way, the very first Traders for a Cause I ever went to, the very first one, I did not know one person.
No, but the people there are there to help. They're all during the year. They're not going to be able to help you. They're busy with their lives, but they come to this event to give back. So, take your shot. You miss every shot you don't take, right?
I always say that to anyone who says they're on the fence about. I was chatting to someone in IU about, and he's like, "I'm not sure whether to go." I'm like, honestly, just trust me, take my word for it, go, and I promise you won't regret it. It'll be one of the best things you do. And I said that to a few people, and needless to say, I had so many people say, actually, you were spot on. I had no reason to be nervous, no reason to be concerned. It was just fun.
There was a guy from Africa there who's like it almost sounded like he lived in a village. We gave him a standing ovation. He flew all the way from Africa, and everybody was offering, to help him. I gave him my Twitter handle and reach out. If someone can come from Africa where there's no one trading in a village, and he's got the trading bug, and he can do it and go there and stand up and pick up a microphone and ask a question under that type of scenario, and you think your scenario is, oh, gee, should I do it or not?
Yeah, you're right.
You know what? I'm going to say something. The prime example, and I'll leave it at this because I know you got to wrap it up. But when I see someone like Dawson, okay,
Yeah, what a journey he's had.
I like he always calls he says I'm his uncle and he's my nephew. But you talk about a young guy who just got in there, introduced himself, took pictures with everybody. It's just like ask questions. And I was very impressed with his video Sunday night with Chris. So I do watch all the videos. I'm an avid, like, if I learn something, I've learned stuff from Dawson. Doesn't matter the age, but you know how you adapt to it is the key. and Scott's adapted over all these years. I have, Sam, you have. It's just you have to adapt to the environment, And as football terms, not soccer, pro football, American football, you can't always throw the bomb, every day. You got to take the dink and the dunks and hit, and baseball, you got to hit singles and doubles. And all of a sudden, look at your month. It'll add up. Yesterday, you can put your foot on the gas. But, today, I didn't put my foot on the gas. I just, I'm paying bills.
Paying bills. And that's what we're all here for. So on that, peace, everyone. Thank you so
Hey,
much.
guys.
Thank you
Thanks,
both.
Sam. Thanks, Russell.
Continue, guys.
Cheers,
We'll
guys.
see you, bud.
My pleasure.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.